Hi there, you're watching Your Trades on ET now with me, Snehisha. With me today is Ankita Saxena. And well, what a day of market moves it has been, right, Ankita? Because Nifty, we felt like it was optimistic in the first half of the day. Did recover quite smartly from the beat down that we did see coming yesterday. But well, has ended the day under pressure. And Nifty ended the day with a cut of 0.2% at the lowest trading point. In fact, 23,992.5, even below 24,000 is where we have shut shop for the day. Sensex 0.2% down. Nifty Bank, however, 0.7% down. So slightly bigger drop coming in over here. India VIX, however, good news coming in at least on this front, because 8% cool off is what we saw today coming for the India VIX as well. However, broader markets also in tandem with the benchmarks. You had Nifty small cap 0.7% down. Nifty mid cap also 2 or 0.3% down. So subdued trading day to sum it up is what I would say at the end of the day. Let's take a look at some sectoral gainers and losers on Nifty Realty. Remember, this one has been the loser for quite the few couple of trading sessions, but today top gainer Nifty Realty on the back of that news that the finance ministry may ease some of their LTCG norms coming in on real estate, and grandfathering might be brought back. Some relaxation on indexation might be seen. So lots happening on the realty front. Metal, IT, FMCG, media, all of these have ended the day in the green. PSU banks, however, the top sectoral loser today, 1.3% lower. Nifty Financial Services, Nifty Bank, Auto, Energy, Pharma. All of these sectors have ended the day in the red. So that's how broadly the market was looking like. But we also had a bunch of textile stocks that were abuzz on the back of Bangladesh unrest. You also had jute stocks that were in focus, Vardhaman Textiles. You had a whole host of other SP apparels, a lot of stocks that were in focus as well. But Ankita, all of this stood out to me today. What stood out to you?
Absolutely, Snehi. In fact, a couple of other stocks that are Bangladesh facing, the companies that have exposure towards Bangladesh were also in focus. Hero MotoCorp, right. Britannia, Marico, besides, of course, the textile companies that were in focus on the back of the growing tension in Bangladesh. But also, we have quarter one updates from Symphony. Symphony, great set of results coming in. In fact, the stock hit 20% upper circuit today on the back of the buyback plan and the stellar results that it posted. We also had BLS International that was buzzing away in trade on the back of good set of results, and also a QIP of 2,000 crores, a fundraise that they have proposed on the back of that. Blue Jet Healthcare, however, was declining in trade almost 10% on the back of a weak set of show that it posted on the quarter one results. We also had the Deepam secretary on ET Now, who said that there's no room for complacency, and we will go on and see what he had to say. But that is later on the show. But for now, we are joined by Kunal Bothra, technical analyst on the show. Kunal, hi, welcome. Today also, I mean, we did see a recovery of 30 odd points, but we ended the day lower than yesterday also. Given the global pressure that's building on, what are you seeing on the benchmark indices, at least for a week or two ahead from now?
So I think there's an immediate move towards safety for the market participants, because that's what we can see in the market internals, the way sectors have been distributed, stocks are being sold, or there is bounce or any kind of a rally which is taken as an opportunity to try and maybe exit fresh long positions, rather exit the previous long positions and not to create any fresh longs on the indices. We've earmarked a strong resistance zone for the Nifty 24,400, 24,500 mark, which I believe could be a more formidable resistance. And this too at the backdrop that we've not cooled off completely on the India VIX. So we were almost at 22, 23 plus on the India VIX yesterday on an intraday basis. We had come down towards sub 18 mark on an intraday, but again we've managed to close between 18, 19 mark for the India VIX. So all of those factors indicate that the first may not be out. We could be at the brunt of some more selling if in case the global scenario becomes a lot more trickier going forward. And I believe that volatility settling down is not a matter of 1 or 2 days. It ideally takes maybe 1 week to 3 weeks for the volatility across the globe as well as across our markets to try and settle off. So I think it's a process, and I believe in that process the markets could probably use any kind of a bounce as more of an opportunity to try and trim long positions.
All right, so that's the view coming in from Kunal. But Kunal, tell us, you just said that you would prefer if people did not create any new fresh longs. So if you have to recommend picks, are you on the long side or are you now looking at short? shorting some trades?
No, I think recommending fresh longs in the sense closer to higher point of the trajectory.
Okay.
So when you are into a range, when the index comes down towards the lower end of the range, of course the risk reward opens up quite well. So I think that aspect I've given two buy recommendations. The first one is about CESC. That's a chart which is apparently doing pretty well for itself. The stock holding on to that 170, 173 kind of a major support zone. So would suggest a target of 182. Stop loss could be kept at 170. And from the low to moderate beta spaces, ITC is something which is looking attractive. The stock which had been a tad bit of an underperformer in the last 1 week or so, I think could probably try and make a comeback again. So buy with a target of 500. Stop loss could be kept at 476.
All right, Kunal, thank you so much. ITC and CESC, those were your picks. Thank you so much for that. We will let you go on that note. But coming to word from the wise after witnessing a global market sell-off, we spoke to Ajay Srivastav, CEO Dimensions Corporate Financial Services, on what he thinks of the corrections in the markets. Let's go across and listen into why he thinks that correction is well needed.
Can't say the storms have come and gone, because the storms is what brings in the fresh air in the market, and storm is what cleans out the deadwood from the market. I think it's a great thing to have corrections, because two things happen. One is the complacency in the system disappears, that everything is going to go up and you need to plan your portfolio. You never need to book profits. You never need to look at your stock at all. I think that complacency is now gets a one root check. Now, listen, guys, you need to look at a portfolio. Making money is not all that easy in the market. You need to select stocks, be with them, add, and when time has come, to sell the stock as well. It's not necessary to just keep adding up the stocks. So I think we will see more volatility for the simple reason that we are in India, we are at a much more bigger crossroad that, while there is a clamor for interest rates to go down, you've seen what happened to the bank. The ability to find money is very, very becoming difficult for them. So we are, unlike in the US, a different conundrum altogether, that there is scarcity of money with the bank while there is pressure on interest to go down, and which forces a saver, if interest goes down, go more towards equity market, not less. So, yes, volatility will continue. I think new themes will emerge in the market, but the key factor is booking of profits is again coming back to the table. Did you manage to book some of your profits when the going was good in momentum stock? You may get the same price back, but that will take a lot of time for some of the shares to recover.
All right, so Ajay Srivastav is seeing this volatility last for a little bit longer, but what is Nikunj Dalmia's take on this? Why did the global markets crash the way they did yesterday? Why was today also rather subdued? Listen into ET Now's Editor-in-Chief, Nikunj Dalmia's take on that.
So what happened yesterday? We all know that. What has changed? If out of the three factors, which in a sense triggered across the board selling stampede, the technical aspect, which is the yen carry trade, and which in a sense created a snowball effect in all other asset classes, looks like that technical pressure seems to be getting over after what the Japanese Prime Minister in a sense has indicated. So if yesterday's selling was more technical in nature, looks like things are looking better. So what happens from here? If indeed it was a technical sell-off, then the technical sell-off will get arrested. But when you see such a large shakeout and perhaps a selling stampede in all the asset classes across the board, obviously it will take some time for markets to recover. And historically we've seen that when these shakeouts they happen, the tone and tonality of the market changes, which is in terms of leadership, in terms of outperformers, in terms of allocation of capital. So it's too early to say that whether we are out of the woods, but it suffice to say that the technical overhang which had hit the global financial markets, from gold to Bitcoin, from a sell-off in the bond market to equity, from small to large cap, from mid cap to mega caps, all of them seems to be getting arrested. But when such a shakeout happens, based on what I've learned over the years, it just does not go away in a hurry. What you may actually see, Aisha, you may actually see a market where the bias could be down, the volatility will subside, but I don't think you can really make a case that that high energy momentum which the market was enjoying post the budget or after the election, that will come back. Because now you would be thinking, oh my God, have I forgotten risk? I need to understand that. So the word risk and the recognition that financial markets have volatility, that will come back.
All right. With that, it's time for us to take a short break. Let's go. Let's come back after the break, and we'll give you more details.
Hi there, welcome back. Let's talk about some big buzzers in today's trading session on the back of earnings. Now, you had VMA that came out with a stellar set of numbers. That stock was as high as 8% in today's trade, but has ended rather subdued after the reversal in Nifty we saw today. On the flip side, you had Protean and Syrma SGS also that came out with their numbers, but well, Protean down 6.7% and Syrma SGS also very weak set of numbers coming in. That was down 8.2% as well. Let's go across and listen in to what the managements have to say about the growth outlook going ahead.
I believe that the demand trend should continue. There's been a lull of almost 2-3 years in the last, post-COVID session, and I think the rural recovery was just around the corner. Given the fact that we are significantly, ramping up our VMart profitability and operations, similarly in the unlimited brand space, we've also, closed a lot of loss-making stores. So we should see some margin improvement. We should be looking at opening roughly around 50 odd stores this year. I think we are quite well on track of reaching that number.
Coming out of the election mode, the next 3 quarters for the year, there's already strong growth, as I mentioned, in pension and identity. PAN, where we've seen a dip, we are already seeing the momentum, it's getting picked up. And we see a healthy year going forward.
We are very confident of achieving this. We're not revising them upwards or downwards. Going forward with the order book position which we have in hand, we believe we are on track to achieve the top line and the EBITDA margins and generate a positive cash flow. The top line and the bottom line, which is around 7%, 315 crores, what we had guided the street with about 4,500 crores of revenue. We are on track to achieve that. In the coming quarters, healthcare would grow significantly.
All right, speaking of the buzzers then, buzzer in trade was BLS International that was soaring away almost 10% in trade today on the back of its stellar Q1 performance and of course the buyback news. But Shikhar Agarwal, who's the Joint Managing Director of the company, joined us and he shared his insights into the June quarter performance and the outlook for the quarters ahead. Let's go across and take a look at what he had to say.
We've been talking about it from the last few quarters that we're looking at margin expansion. So this is the new base of the company. We are touching new highs every quarter. Whatever numbers we have achieved in terms of margin, in terms of revenue, in terms of EBITDA, I feel this is here to stay. And we can see further growth in margins coming in the next few quarters. The numbers, the revenue growth rate we've achieved of 30%. We've had a volume increase of 18%. So this quarter, we did 8.5 lakh applications compared to 7.2 lakh applications last year. And this has to do with the growth in existing business volumes and also new contracts. From second quarter onwards, we see further growth coming in because the acquisition of iData, those numbers, those volumes will get added.
All right, that's the word coming in from the management of BLS International. But well, in an exclusive interview with ET Now, DPUMP Secretary Tuhin Kanta Pandey says that they need to address issues related to the demerger of non-core assets. Let's go across and listen into what he had to tell us in this exclusive conversation.
Wherever the ongoing cases are there in life, but I think we do have challenges and we keep on addressing those challenges. In both the cases you mentioned, we had demerger as a challenge of non-core assets, which were the transactions in their own rights, separate transactions in their own right in terms of demerger process, because listed companies, it involves a lot of work in demergers. Having achieved it, we have some of the other minor challenges to be sorted out. Forthwith, and thereafter I think we would be in a position to take it to further thing, and how much we will be able to conclude successfully, we'll let you know as it. I think Department of Financial Services is quite looking into a lot of issues and their value creation and how their performance can be improved in the other 3 general insurance companies. As regards GIC, it is fairly strong at the moment and continue to move forward.
And we also had the management, MD and CEO Ashwini Kumar of Yuko Bank on a channel who shared his slippage ratio guidance and also highlights of how they will be impacted due to the RBI's draft guidelines on LCR. Let's go across and take a look.
We have given a guidance of slippage ratio 1.25%, 1 to 1.25%, and the slippage this quarter was in 1.03% on annualized basis. So slippages are under control. See, currently we are maintaining LCR ratio well above the RBI guidelines, and we are continuously monitoring on a daily basis our LCR. With regard to these new guidelines, these are just draft guidelines, and once the final guidelines are there, then impact will be better known. Currently, we have worked, it may be around 10%. Currently, we don't need capital for the purpose of our growth. So we need not to slow down our growth for want of capital. Our capital is sufficient enough. Our internal accruals during the quarter and for the full year will be sufficient enough to take care of our growth requirements.
Well, let's move on then and talk about the geopolitical pressures building up on our neighboring country, Bangladesh. And, on the back of that, we did have some apparel companies and some jute companies that stood to gain on the back of everything that has been going on in Bangladesh. Now, these tensions may force textile companies to start outsourcing from other countries like India, and that is why textile stocks did pretty well in today's trading session. Now, we caught up with the CMD of Vardhaman Textiles, and we also SP Oswal, and we got his view on the same as well. Let's go across and listen in.
They still import a lot of yarn and fabric from India. Now, fabric is being nominated by some of our brands, and garmenting is done in Bangladesh, which may therefore be somewhat temporarily affected in my view. When it comes to fabric and yarn, we have different percentages. In yarn, we are exporting roughly about 35-40% of our yarn production as exported yarn. And similar is the fabric. Fabric may be somewhat less, but 30-35% being exported. Our primary export is Bangladesh. Of course, some export go to even Latin America and some to Indonesia, but that is very limited because here our access is far nearer.
Moving on to an ET Now exclusive then, we learned from reliable sources that the government may address the concerns over the budget proposal to revise the LTCG for real estate transactions by offering a few reliefs. My colleague Prakash Priyadarshi is getting us exclusive details. Let's go across and take a look.
Yes, an important development coming in as we are learning from our sources that the government is likely to make some changes to the budget proposals to revise LTCG tax on real estate transactions. We are given to understand that the government has taken a note and some relief measures are likely to be provided. A very significant development coming in as the government has taken various options into consideration on industry's demand, and some tweaks are expected in the proposal to address the industry's concern. We are given to understand that the government is likely to consider grandfathering till July 2024 as a relief for the real estate sector. Along with that, industry has also requested the government to provide customer with the option for selecting the regime, whether it is 20% LTCG tax with the benefit of indexation or 12.5% LTCG tax without benefit of indexation. And the choice should be left with the customer, and that is likely to be part of these amendments. We are given to understand that the finance minister is scheduled to table the finance bill today in the parliament, and some relief measures are likely to be announced for the real estate sector. Back to you.
All right, Prakash, all eyes are going to be on whether anything is contained at all in the finance bill for the real estate space like the street has been hoping for. But let's move on and on to yet another ET Now exclusive. We learned from reliable sources that the Consumer Affairs Ministry has written emails to 17 alcohol companies regarding the prohibition of surrogate advertisements. For more on this, we are being joined by my colleague Aishwarya Patil. Aishwarya.
Well, government has been taking active steps in regulating misleading ads as well as surrogate ads in the alco-bev space. So far, what we've learned from our sources is that 17 alcohol beverage companies have received emails from the Consumer Affairs Ministry so far in terms of the prohibition of surrogate ads. The ministry is currently engaging in public consultation on this particular matter. Industry bodies such as ISFI are in talks with the Consumer Affairs Ministry to come out with a framework as well as a draft, and a conclusive decision should be taken in about a month's time on whether sponsoring of events, surrogate ads, and the framework overall, what that will look like for the industry as well. Currently, India does not allow direct advertising of alcohol or surrogate ads, which circumvent the laws against advertising in this particular space. ISFI members include, of course, companies such as Diageo, Pernod Ricard, Moët Hennessy, as well as William Grant and Sons. These are some of the companies that may see some sort of impact in this particular space when the new rules do kick in about a month's time. Now, the new rules may include prohibition against engaging in surrogate advertising, fines for not only companies but also celebrities who endorse these particular ads, especially in the liquor space, and both celebrities as well as brands will be held equally responsible on an equal footing if the ads are found misleading. Now, what exactly are brand extensions? You may have seen products with logos, designs, as well as labels that suggest a sort of a brand recall of an alco-bev brand. And in some particular cases, both online as well as offline, you will see mineral water, soda being sold. You also have some home decor items and other kind of merchandise being sold not only online but also in offline tap rooms as well as bars in some particular cases. So that may be under the scanner, and overall we'll see how this particular rule may impact the alco-bev space going forward.
All right, it's time to wind down on this edition of Your Trade Snehi, and I will take your leave. Thank you so much for tuning in.